Welcome to Knotcast, where we untangle trade, finance, and technology driving global liquidity. Today, we're talking about something that's quietly turning into a trillion-dollar conversation: trade finance as an asset class. And joining me here today is Mr. André Casterman, a global figure on trade digitalization and credit markets. André, it's a pleasure to have you here.
I'm delighted to be here with you, Kenny.
What does it mean when we say trade finance as an asset class?
Basically, trade finance represents real economy activity where businesses need working capital to run their economic activities. As we see banks impacted by regulatory measures, less bank lending has been available to businesses around the world, mainly to small and medium-sized enterprises. And this creates a funding gap, as we call it, which is why the industry has been calling on new entrants to provide liquidity into this market, and those new entrants can be asset managers, their clients, liquidity providers like credit insurers or pension funds, family offices, addressing the need for new sources of liquidity to help sometimes the banks or to help the non-bank financial institutions extending funding to those businesses. We have had multiple studies in the market through the International Chamber of Commerce, with the ICC Trade Register, and other activities through BAFT. Various associations have been taking a focus on this issue and this ambition to attract capital markets and liquidity providers from those institutional investors to the trade asset class. However, there are multiple obstacles because it is a very specific asset class made of various ways to fund businesses, made of various instruments. So it is not as simple as financing credit card or loans like auto loans. So we have been educating capital markets over at least a decade, and we have seen new entrants indeed on the liquidity side starting to work, sometimes with major banks, sometimes with local banks, but also mainly with non-bank lenders. And the market is starting to scale, and it's very promising, but more work is needed to make this asset class far more accessible. And it is already attractive, but we have to make it more accessible to those institutional investors.